It's Wednesday, November 16, 2022. We have a lot to talk about today. I'm not going to waste your time. Certainly not going to waste 10 minutes on this video to tell you that this is going to be the most expensive Thanksgiving in history. You all know that. We've talked about that months ago. I want to talk about what's coming and what is really going to affect every person out there and what's affecting people right now and why we need to be preparing on a daily basis. I was watching an interview on Fox Business, and they were interviewing people on the East Coast. Winter has begun. It's getting cold, and heating costs on the East Coast, people are beginning to feel the cost already. Home heating oil is expected to rise 45% compared to last year. Heating oil is up 25% year over year right now. And the heating bills have just begun to surge. And the people on the East Coast right now, as the weather's changing, getting cooler, heading into winter, are going to really feel the pain. So while this is happening, while people don't have enough to eat, we see food insecurity, people are struggling to put enough food on the table. Now people are going to struggle to heat their homes. Well, the administration, this isn't about getting political or anything like that. We're just talking economics here, and we're just talking common sense. But the administration now wants another $40 billion to send over Ukraine. To send to Ukraine. Does this make any sense to you whatsoever? And again, not political, but we're talking numbers here. We're talking about lives here. We're talking about people struggling. Should this money be going to Ukraine, or should it be helping people heat their homes, put food on their table, create jobs? Please comment down below. I'd love to know your thoughts about that. It makes no sense to me whatsoever. While people's savings rate continues to decline and their credit card debt continues to explode. This makes no sense to me whatsoever, but we're going to continue to watch this happen. It's going to continue to really weigh people down as they cannot save money, as they're turning to credit cards to survive. It's a bad combination while everything continues to go up in cost. And, we hear about, everybody shopping at Walmart and Target. What we don't hear is what they're buying. They're not there buying retail goods now. They're there just buying food. They're having to make a choice now. Do I go buy some retail goods? Do I buy some toys for Christmas? Or do I buy food? And people are going to choose food over all else. So it's going to be very interesting to see how this plays out in 2023. I expect it to get much worse. And also, just a quick note, the yield curve inversion today is the highest it has been in 22 years. You have the 10-year at 3.69 and the 2-year at 4.37. And yet we're being told that there's no recession, nothing to worry about. So let's get into some of these articles today. This one comes from Fox Business. Retail sales rise faster than expected in October despite painfully high inflation. Now, this is not adjusted for inflation. Everyday goods, including cars, including food, including gasoline, rose 1.3% in October. It increased from the stagnant, flat September. The consumer, ladies and gentlemen, is spending more to get the same or to get less. That's what's going on. So yes, retail sales are up. That's because people have to spend more money to get less. Retail sales also likely were boosted by a one-time stimulus check here in California that was worth up to $1,050. And you can also blame it on early holiday shopping. But at the end of the day, prices are going up. People are spending more and getting less. And we have nearly 40 million people here in California. I don't know how many millions of people got a stimulus check. I didn't get one, but I'm sure millions of people did. And of course that had an effect on things. People took that money and they went out and they spent it. This, to me, in my opinion, is going to give the Federal Reserve more ammo to raise interest rates. I expect 50 points in December, and then we're going to see, I think they'll lower it to 25 basis points in 2023. I forgot how many hikes we're looking. I think February, March, we have hikes. Correct me if I'm wrong, but those will probably be 25 basis points each. But I don't see any reverse. I don't see any pivot. I see continued rate hikes, although they will probably be less than we're seeing right now. Target shares plunge after retailer reports profit decline, warns of soft holiday quarter. They are cutting their fourth quarter outlook after seeing sales slow in late October. The big box retailer saw sales decline as families contend with higher prices. People are making a trade-off, ladies and gentlemen, between what they need and what they want. And people are going to lean towards what they need as opposed to what they want. People now are cutting things out, even though we know they're using credit cards, they're using payday loans, and there's a lot of people out there still making bad choices. But many people now are forced because those credit card balances are getting so big, paying the minimums is starting to add up, and people are beginning it's beginning to take a toll on people. They're beginning to really feel pain here, and that's forcing them now to make serious choices. Target plans to cut up to $3 billion in total costs over the next 3 years. That to me means get ready for layoffs, ladies and gentlemen. More layoffs coming. Here's one from CNBC. Home builder sentiment drops to decade low as builders add more incentives. Before you know it, they're going to be giving away cars and boats just to get you to buy a house. Sales conditions fell 6 points to 39 points. Sales expectations in the next 6 months dropped 4 points to 31 points, and traffic declined 5 points to 20. The drop in November is the 11th straight monthly decline and the lowest level since June of 2012. Here's another one. FTX founder Sam Bankman-Fried hit with class action lawsuit that also names Brady, Giselle, Shaq, Curry, all of them. All these celebrities, all these athletes now going to be in this class action lawsuit. Billions of dollars now in damages. These athletes, these celebrities, who knows if they even bought this stuff, if they owned any FTX. But the bottom line is this. They got extremely rich because they made tens of millions of dollars to pump this stuff, to advertise it. And yet the average retailer, investor, they got took. They're going to lose everything. Whether it was $50, $5,000, $50,000, $500,000, they're going to lose it all. I think Tom Brady got paid $20 million just to pump this thing. So he's going to be just fine. But now, class action lawsuit. But, you know, reading this on Fox Business, it reinforces with me, we must be careful who we listen to. There are so many con men out there, especially on social media, so many people pumping stocks, pumping cryptos, pumping all types of things. Yet how much of this do they actually own? The products that they pump, do they own it? The stocks that they pump, do they own the stocks? The cryptos that they pump, do they own any of the cryptos? Do they own $5 of it? Do they own $50, $5,000, $50,000, or zero? We have to be very, very cautious now of people on social media and what their agenda is. Every day, pumping something, trying to sell us something, more stocks, more gimmicks, more cryptos. Be careful, ladies and gentlemen, because most of these people never spent 1 cent of their own money to buy those products, to buy those cryptos, or to buy those stocks. And we're going to see so many people out here now trying to take advantage of people as the economy gets bad, as people are looking for anything to make money in. And there's so many con men out there. Be very, very careful out there. They're going to keep promoting these Ponzi schemes on social media and these stocks, and people are going to continue to fall for it while the people that pump it make all the money and you lose. Do your own due diligence. Do your own homework. I'm not saying all of it's bad, but make sure you do your own homework. Don't just listen to these people. Don't listen to the celebrities. Don't listen to the athletes. Don't listen to the people on social media. Do your own due diligence and make sure that you know what you're buying. Here's another one. Genesis crypto lending arm suspends customer withdrawals after FTX meltdown. They said FTX has created market turmoil resulting in abnormal withdrawal requests which have exceeded our current liquidity. Ladies and gentlemen, you're watching a basic electronic run right now, an electronic bank run basically. People cannot get their money out. And this is what's really scary, and this is what you need to be paying attention to, and this is what you need to be worried about when you put your money in certain areas, whether it's in these exchanges, it's in a hedge fund, it's in stocks, it's in a bank, it's in an investment, wherever. Is it safe? Again, If you don't hold it, ladies and gentlemen, you don't own it. And this is another prime example of why you need to be your own central bank. You need to know where your money is and what happens if you can't access it. At least be diversified and have a portion of it outside of the system that you can get to in a time of emergency. But I'm telling you, we're going to see banks in big trouble. We're going to see more of these crypto companies in trouble. We're going to see hedge funds in trouble. We're going to see the stock market in trouble. We're going to see it all in trouble. Make sure you have access to cash. And also, you have access to physical gold, physical silver. Mortgage financing dries up. Another article today in Fox Business. Refis are down 88% year over year. Today, 30-year fixed mortgage rate sitting at 6.9%. It's pulled back a little bit. Doesn't matter. Nobody wants to buy a house now. Nobody can buy a house now for the most part at these rates. And it's going to continue to slow down. Look, we're going to get another rate hike in December. That is going to play a role in mortgage rates. Yes, we do have a little pullback. We're sitting at 6.9%. Whether it's 6.9% or 7.2% or 7.3%, it doesn't make a difference. It is now double what it was a year ago. I want to finish with this last article coming from the Wall Street Journal. It's titled, "More Homeowners Using HELOCs as Financial Safety Net." Actually, it's really, they're using HELOCs as a ATM. Using their homes as an ATM. Americans took out $66 billion in home equity lines of credit in the second quarter. It's a 40% increase from a year ago. Think about that number, $66 billion in HELOCs. The average HELOC rate is 7.7%. This is like using your house as an ATM. A giant ATM. And most people don't realize this money has to be paid back. Now, people will tell me when they go out to dinner, some of the restaurants are busy. They drive around, cars all over the place, freeways are busy. I agree. I went to a restaurant the other night just for takeout for some Thai, 45-minute wait. I said, forget it. Driving down Interstate 10, cars everywhere. People shopping, people going to travel and take vacations. Now you know how they're doing it, ladies and gentlemen. Credit cards and HELOCs. They're using their homes as ATMs, not even thinking that they're going to have to pay this back at 7.7%, not thinking that the price of homes is coming down now. They're losing equity in the homes, and this has to be paid back at 7.7%. But again, you want to know why when you go into a restaurant, it's busy? If it is, because a lot of restaurants aren't busy, but when you do see people in Las Vegas, when you do see a busy restaurant, when you do see people driving around, when you see people just oblivious, maybe a lot of these people out here playing golf, completely oblivious. Many of them have pensions, and hopefully and prayerfully that their pensions don't get hurt. I don't want to see anybody lose their pensions or lose money. I don't want to see people get hurt, but people are oblivious to the warnings and the potential that their pensions could get wiped out. How many of these people right now are out here because they pulled money out of their homes? How many of these people are out here for a weekend? They rent places out here for a weekend or a week or a month, slap it on the credit card. But think about HELOCs. How many people just pulled $100,000 cash out of their home, $200,000, $300,000 cash out of their home so they could come out here for the winter and play golf, go buy a boat, whatever, go gamble in Las Vegas. This is how people are doing it. Are there people with money out there? Of course. But we know that millions of people right now are in big trouble, and they're using their homes as ATMs, and they're taking credit cards, and they are running up debt like we have never seen before. Credit card balances jumped 15%, the highest leap in 20 years as Americans fall deeper into debt. This came out a couple days ago on CNBC. So yeah, some people can be out here. They can afford to do it. God bless them. If you can afford to do it, you're doing well, you have money, you're not worried, everything's paid off, have the time of your life. But if you gotta pull money out of your house to support a lifestyle or to take a vacation, if you gotta use a credit card in order to buy a watch or take somebody out for dinner, you're making a huge mistake. I want to finish with, let's finish with these last two articles. LA Port Head says October was quietest month since 2009. This on The Hedge. The ships in LA in Long Beach that we saw over the summer, spring, over the winter, they've disappeared. Retailers and manufacturers at this point have slowed or stopped ordering merchandise, products, or good overseas because they don't have any place to put it because there's so much inventory in the warehouses, or there's just no demand now. So they're just canceling orders or just not ordering from overseas, and the ships are disappearing because of it. So the last article I will finish up here with all of you, I think it's an important one, comes from CNBC. San Francisco Fed President Mary Daly sees rates rising at least another percentage point as pausing is off the table. Pausing is off the table. And markets, nothing catastrophic happened today. Now, last week when they were talking about, they had some Fed people come out and say that the Fed may slow it down. Dow Jones up over 1,200, NASDAQ over 760, just on the hope that the Fed would do that. Now we have San Francisco Fed President Mary Daly coming out saying, not going to happen. There's going to be no pause. We're going to raise at least another percentage point. That the pause is not even part of the discussion, she says. And nothing happens today, no catastrophic meltdown. Now, if it was the opposite, we would have seen the Dow Jones go up over 1,000 points today. Very interesting. But this is just telling us that the Fed is not slowing down anytime soon. And the scary thing is, we're talking about giving another $40 billion to Ukraine. I think we're looking at, $10 billion, $20 billion to Indonesia, whatever it was, so that they could clean up their energy over there. It was billions of dollars. And so we are spending money continuously. So the Fed is going to continue raising rates while the government continues spending money. This is just not going to be productive to fight inflation in any way, shape, or form. So if you continue spending and raising rates at the same time, how is this productive? It's counterproductive. So expect more inflation, ladies and gentlemen. We're going to continue to see more crisis in food, more shortages, more people suffering, more layoffs. More layoffs are coming. So all I can say today is stay on path and continue to prepare. This thing is going to get very, very ugly in 2023. And unfortunately, people are going to continue to borrow money out of their homes. They're going to continue to run up credit cards, and they're going to hit a brick wall at some point when the money runs out. They have nowhere to go. These people are not prepared. Make sure you're not one of these people. Get your debts paid off. I beg you, get your debts paid off. Get out of debt. At least get it manageable. Get on it today and continue preparing. God bless all of you. Please like this video, share it, subscribe, and I look forward to speaking with all of you very, very soon. God bless.